think, act, and prosper. You are now tuned into the Money Level Show.
Hello, everyone. We're back at the New Orleans Investment Conference. Welcome to the show, the Money Level Show. Today I have Kim, who is with Sandstorm Gold, which is a royalty and streaming company that I've invested in for a while. So glad to have you here.
Thank you for having me. It's great to talk to you and look forward to getting more in the details of Sandstorm.
Yeah, so I learned about Sandstorm through Lynn Alden. That was the first person who introduced me to the royalty and streaming company. And then I remember going back and watching Nolan Watson and some of his interviews when he's made appearances, and just the case for royalty and streaming companies. It just sounds very, intriguing, and it's less risk than investing directly in the miners. And so is that something that you all really pride yourself on, just having less risk than being directly exposed to the mining companies?
Definitely. I think as an investor, it's really hard if you're not an expert in the mining industry to be able to look at all the companies and pick who has the best project and management team, because mining is difficult. There's a lot of challenges that come up that unless you're a geologist or an engineer, you may not be able to identify those. And so that's what Sandstorm does, is we have created a portfolio of assets that our technical team has, done the due diligence on, and tried to find the best investments and what fits best in our portfolio. And so what we try and do is, create a package and an investment opportunity that has a diversified portfolio that's been de-risked, with the model of the royalty versus, investing in an operator.
Okay. So that's very interesting for me, because I don't have a lot of time to research every single mining company. I mean, obviously we know about the big name, the big mines and such. And so it's like you do the homework for the investor, and what does that process look like? What are you looking for whenever you're assessing whether this is a mine you want to finance?
No, great question. So our due diligence process is quite expansive. We have a team of geologists and mining engineers that we like to think are kind of best in the world. They have tons of experience. They've worked at mines across, many different countries and evaluated a lot of projects. So they've seen a lot of things. And so, when a project either comes to us and they're looking for financing, or sometimes we reach out to companies that we like, our team looks at it not just from a technical perspective, but we also look at the management team that's actually going to be, putting this mine into production. We look, have they, financed projects before? Have they brought things to production? Do they have experience in the country? What is their history? You look at their balance sheet and the company itself, if they've been able to raise money to finance things before. And then on the project itself, depending on what stage it's at, we're looking at, if it's, further along with the feasibility study, our technical team's kind of digging into that to see if we agree with it. And, we look at different scenarios of, kind of worst case to best case scenario, and give probabilities to those and apply that. If we made an investment, how would that impact the project's economics and whatnot? So there's a lot of different variables we look at, and the number of projects that come across our table versus the amount we actually invest in is, there's hundreds of projects that come through a year. And, some years we only make one or two investments. And so, we're quite thorough and strict in our process.
Mm-hmm. Is there any particular market caps that you all look for? I mean, obviously you have the explorers, and which I don't know if you all engage in that or not. But then you have the actual mines, and so this whole process of exploration to development to mines, do you invest across the spectrum, or is it solely in when a project is going into become a mine?
Great question. And that's changed across the history of Sandstorm. So when we started, we were the streamer for the juniors. So most of our investments were in, junior single asset owners. And how it's evolved is, in a lot of those cases, those projects were great projects and ended up being picked up or acquired by a mid-tier. And so naturally, the counterparties got stronger and larger. And then as we got larger, we were able to invest in, do investments with more mid-tier size companies and even majors. And so, I think it's evolved. And so we've invested across all sizes, as well as all stages. Now we are focused more on near-term cash flow, and that's kind of the last few years is what we've looked at as projects that are either in production or close to production. And we've, in the past bought a lot of exploration and have seen those move forward. But I think now the focus is things that are closer to production, but we still do look at exploration stage and in some cases juniors.
Mm-hmm. So like in the current environment, I mean, for me and my conversations with some of the explorers, it seems like capital is a little tight right now. Credit's tight. Rick's come on my show, and Rick Rule said he's cutting checks, and such. And so, do y'all see any opportunity where you have like a highly valued company that you feel is very valuable or has a valuable asset but may need financing? Are you all still like fluidly looking at those things during this time with the cash flow, or like?
Last year, so in 2022, we did almost $1 billion worth of deals. So we acquired a package of royalties and another royalty company. And so with that, we bought a lot of our growth and we drew down on some debt for that. And so right now our focus is paying down that debt. So from a capital allocation perspective, I don't think you'd expect to see any large deals or many deals from us in the next, 12 to 18 months until we pay down that debt level. I think we'll be a bit quieter on that and, allocating that capital to debt repayment and continuing our quarterly dividend that we have.
Okay, got it. That's good. That's good. So y'all had to do my homework. I got my notebook here. You all know. And so I was looking at some of your, just on the website, currently your 5-year projection is anywhere from 165 to 175 million in cash flow. But that's based on an $1,800 gold price. And so then I think investors have to ask the question of, where do you predict the gold price is going to be in 5 years? Because that cash flow could be more than 175 million. And so you mentioned that you actually go by the ounces. So you're looking at 125,000 ounces a year in the next 5 years. That's the projection.
Yeah. So in the next 5 years, we expect to peak at 125,000 ounces. And so, depending on what your gold and commodity price is, you can apply that to that amount to see where the cash flows could be. I think we've always been conservative on looking at what the gold price is, knowing that it is volatile, but seeing the leverage you have with that, I think it's just upside with the company.
Mm-hmm. And how do you think or what's kind of some of the goals for that cash flow? Obviously paying down the debt. Currently you pay out a dividend, quarterly dividend. Are you looking at any share buybacks or anything of that nature? What's kind of like some of the goals that you all have?
Yeah, in the past we have allocated quite a bit to share buybacks. And I think that's something that we see as a good use of capital depending on the time. I would say if we didn't have a debt balance right now, I'd assume we probably would be buying back shares at this level. Previously, over the past probably 5 years, we've looked, and if we feel that our share price is trading below 1x NAV, we'll be buying back shares in the market. Right now with the debt, we're just using capital towards that. But I think it's always a balance of what's the most accretive use of your capital. And depending on the deals that are out there and how accretive those are, you have to balance what makes sense to do. But I think in the future, you can expect we'll continue to pay the dividend. I think over time, especially as the debt levels go down, there's a goal to grow that dividend. I think we'll be looking at new deals in the next few years, always to kind of see what the environment is out there. So I think it'll be a fluid situation depending on the environment.
Yeah, that's good. And so, in terms of jurisdictional risk and financing projects, So I'm an investor in VALE.
Okay.
And so VALE, you all own 6% of the royalties coming out of that. Or not 6%.
We own it's a smaller portion.
Yeah.
But it's pretty significant because it's quite a lot of
Yeah,
assets it's
definitely.
based off of.
I worded that bad, y'all. Don't worry about that. So VALE, you know, it's obviously in Brazil. There's a new president in Brazil, and so some people may be concerned about the jurisdictional risk of politicians either overreaching or issuing excessive taxes on some of the commodity companies and such. And so, how are you all assessing that? How do you all keep your eye on the ball in terms of jurisdictional risk?
Mm-hmm. So I think, we look at it on a case-by-case basis. One project, let's say the exact same project, could be owned by two different mining companies, and one in our process could look a lot riskier than others because they haven't worked in that country and they don't have a history of being able to work with the local communities or somewhat things like that. And so we look at that and see, do they have a history of it, the management team experience, but we also look at the country itself, and you look to see how have mining companies been treated in the past? Have they changed their tax regime? Has there been issues with getting permits? So you kind of look to see the history on that and see how things have changed. And if certain countries, things have changed quite a bit, that might be seen as more unstable, and we may not look to invest there. We also, in some cases, have made investments in a country, but the investment and deal has been made through two Canadian parents, which helps reduce some of the risk. If there are some, with currency controls or whatnot. So there's different ways to structure it, but I think you really have to look at the team and the project and the history of the country. So for us, we have, a few different investments in Brazil, which has been it's a really big mining country. And the Valley ones specifically are on iron ore projects and multiple projects that they have there. And, I think for us, it's been, a really interesting investment. Iron ore prices have been strong. And so it's been one that, Vale is such a huge counterparty and, is very established in Brazil, which I think gives them a little bit of strength with amongst that because they employ so many local people, probably provide quite a lot of tax revenue and sources of income for the country itself.
Yeah, that's good. That's good. Sandstorm is mostly gold focused. There are some projections as far as silver and copper as well. So currently, we're in an environment where national debt of the United States continues to increase significantly, moving towards 34 trillion budget deficits, and so obviously owning real money is something that people should do. I mean, insuring your wealth is very important. And so why gold for you all? Why is gold the main focus? And then what does the silver and copper pieces look like within Sandstorm?
Yeah, great question. I think for us, gold historically has been a store of value. And it has, some of the attributes that are really, similar to a currency. And so, I think, as you mentioned, investing in hard assets, physical assets, is something that we really believe in, and we believe in the value of gold. Unlike money, you can't print gold. At least there's no technology yet. And so, I think, our belief is gold is used in so many different sources, and there is a finite amount in the world to be able to mine. And so, all the kind of easier, higher grade, cheaper ways of, cheaper projects have been mined so far. And so that's where you can kind of say, over time, if we need to get more gold out, and it's probably going to be more expensive with cost inflation and, it being deeper or harder to process, that the gold price is probably going to increase as the demand for gold increases and it, is finite in supply. So I think, there's a really good case for that. We've also invested in silver, so that's another precious metal. In some cases, you're going to see gold, silver mines, and so we like precious metals. I think the majority is always going to be gold focused, but we do have a few silver streams as well. And And then copper is the one base metal that we really like. And I think it's important in the future, the electrification, kind of the green energy space, that copper is going to be used in that. And, so we see value in that. So we have some copper streams. We also have a kind of partner company that Sandstorm owns a portion of. It's a publicly listed company called Horizon Copper. And they're really copper focused. And so, Sandstorm had some more copper assets that weren't specifically a stream. So we spun those out into Horizon Copper and then retained more precious metal streams. And so, they're a partner if, they buy a copper project that has gold byproducts. We have a right of first refusal to do, a stream financing on that. So I think we have exposure in a few different ways. And I would say those are, the metals that we quite like. We have invested in other things such as the iron ore with VALE. We've had a diamond royalty. So you'll see us kind of pop into a few other things, but the primary focus and the long-term vision is precious metals with gold.
Mm-hmm. That's good. And what's your take on inflation, currently? So obviously you mentioned like the cost of production increasing. We see that the oil price is still hovering at, 80, over $80 a barrel. There's been spikes. I mean, last year the oil price was over $100 a barrel. And this creates more costs for mines. And so how does that factor into your decision to finance a mine or whatnot?
Yeah, no, great question. So, it's getting more and more expensive at the mine sites because of the cost inflation and, harder to get mine out or get the ore out. One of the benefits of a royalty company is we are somewhat shielded from that because from a stream, we already have a set price we're paying per ounce, and a royalty is, top line, so generally off of revenue. So we aren't directly being impacted by those increases. But what we have to look at is the mines we've invested in, are they still profitable and are they still able to continue with the higher prices? And that kind of comes back to our due diligence of when we look at projects, we try and look at projects that, have strong management teams, have exploration upside where they can expand the mine, but also are low cost mines. And so, we try and look things that are kind of the first quartile or second quartile cost span. So they have, more wiggle room if costs increase, but it also gives them more cash flow to reinvest in the mine. Where if they have, much smaller margins, they don't have that flexibility to reinvest and extend the mine life, but they also, can have issues with liquidity with increasing in costs. So that's kind of a second layer of it and how we look at it and try and, initial in the investment, make sure that they would be able to withstand increasing prices or, let's say decreasing commodity prices. Is it still profitable?
Mm-hmm. That's good. Thank you for sharing that. So you all have I haven't got a chance to watch it yet, but one of my favorite actors, Idris Elba, there's a documentary on him understanding gold or, journey to understand gold or something of that nature. I started looking at it. I saw it on your website. So what was that about, and like how did that come?
So that was actually produced by the World Gold Council, and our CEO Nolan Watson is a member of the World Gold Council. There's kind of CEOs from the top mining companies are part of this, but they put out, created this documentary and put it out to, have people understand a bit more about the mining process. And the different stages of it, and what it produces and what it's used in. So I think it's a really informational documentary that is pretty neat because you see him go underground, multiple kilometers underground to an underground mine, and I think for us, who wear, let's say you have gold jewelry or there's gold in your iPhone, I don't think everyone's aware of how much use it is. But the question is like, where did that come from? You have something shiny now, but it didn't start out there. It started out in a piece of rock where you couldn't even, most of the case, you can't even see the gold. So, I think it's a really informative kind of video. And, it's something that as part of the World Gold Council, we share the content. But
That's good. And what are some of like the values of your company, in terms of like, obviously different mines have different practices. You got a lot of humanitarian issues across the globe. and such. So, and then, you know, obviously mines are in other nations, you know, that may experience hyperinflation and such. And, you know, it's a lot of different things to consider. And so what are some of the values of Sandstorm when you go into finance these companies?
Yeah, so, you know, I would say basically all of our investments have been in public companies. And a reason for that is there's transparency, and, you know, all the companies we invested in, you know, are primarily listed in North America. A couple of them, you know, are listed in Australia, and maybe one or two in Europe. But, you know, looking for a publicly listed company kind of gets you through a transparency issue, and they have to follow those rules. Doesn't mean all of them do, but, you know, it's a bit of one check there. And then our due diligence process looks into that. It looks into different ESG factors, you know, social kind of practices at site, and making sure they're working with kind of local, you know, if there's different indigenous groups or different local communities, and making sure that they're having a positive impact. You know, things are changing in the mining industry, and I think how we've always looked at it is, you know, ones that are, you know, good mining practices that are, you know, helping the local communities and, you know, not polluting different areas are more profitable mines. And so, you know, good business practices kind of go hand in hand with profitability in most cases. And so, you know, we look at all those different aspects because it is, you know, there is a lot of different things to look at.
Yeah, that's good. That's good. Well, thank you, Kim, for coming on the show. Where can people find more about the company and where you're listed at? Mm-hmm. All of that.
So website, sandstormgold.com. We have a YouTube channel with a lot of different video content that we've put out in different interviews, Twitter, LinkedIn. You know, we are listed on the TSX under ticker SSL, and then the New York Stock Exchange under ticker SAND. If you have any questions, feel free to reach out to us. You know, our email and phone number is on the website, but happy to chat through anything you have.
Yeah, that's good. That's good. Thank you all for tuning in, and be sure to check out Sandstorm Gold. I am a shareholder. I'm not giving financial advice, but it's good to learn about a solid company, and appreciate the work that you all do.
Thanks for having me on today.